when you trade long enough, you typically are going to come out finding that your bigger winners are really what make your whole year. If you're cauterizing everything at like 2 or 3 R, you're never going to give yourself the gift of those big gains. So what ends up happening is if you look at a pro trader, the 10, the 15, the 20 R's, which don't happen again intraday unless you're using 2 cents as your R, right? Because then you say, okay, 2 cents versus 40 cents. I'm not talking about that. I'm talking, bigger gains. And again, everyone has their own style, no problem. So I'm not calling your girlfriend ugly. What I'm saying is that if you look at the barometer of your returns at the end of the year, you'll find that probably 75 to 90% of your gains are going to come from those outsized moves, those positions that you had on that you let them run. The smaller losses and the smaller gains and the break even trades wash, right? And I talked about in the live stream how I very cleverly tried to bump up my protective stops to break even as fast as I possibly could because I knew I was too new to really improve my accuracy, right? I knew that I couldn't read books and learn stuff because trading was experiential. So I came up with an idea that if I could somehow minimize my losses, both in size and in frequency, magnitude and frequency, then my trading would be better off, right? Because I'd be keeping my losses smaller and or eliminating them, even though I wasn't making any money, getting knocked out at break even. Again, in your emotional hierarchy, look at Tuesday's episode. I thought overall I was better off if I would get knocked out at break even and deal with that frustration than to stay in something and have it lose me money and get knocked out that way. Because that was favorable, right? Get knocked out of a trade for a loss or get knocked out of a trade for a break even. Look at both scenarios and compare it from both the psychological and the financial. Make sense? So you can go to work and look at your own trading and see like how many times did you get into a trade where it was up a little bit but you didn't move your protective stop and you eventually got knocked out. This is a place where you could look and learn to maybe add a time stop, which depending on your holding period could be a couple of days, could be a couple of hours. I don't know. It's really up to you. So I always figured like this is the way I was gonna grow my account was to not deliberately come out and try to hit grand slams on the day, but with Monday's episode of progressive exposure, add into my winners, not pyramiding, because that would be more like excessive leverage, and I wasn't ready for that. I eventually got there, but at the beginning, I was very, very aware that the leverage could kill you. Plus, I knew with stock trading, the Reg T margin was like 8%. So, meaning broker call money or what have you. And I didn't want to have to pay any more than like my friends in Canada who have to pay for overnight positions in CFDs. Like, man, they're just the worst instruments ever. I wouldn't trade them if you paid me. So when you clustered like your gains, you really see the opportunity cost of what happens of taking small gains and not letting them grow up to be bigger gains. And so if you want to know the math and you look at your end year results, you can see that the larger gains are really what carry the year and give you the net returns that you want. Again, you have to figure out what you're doing it for. If you like the feelings that are, sitting at your desk and you got all your shit set up and your hotkeys and your monitors, and it makes you feel good to ring the register every day, again, I celebrate that. You're making money and it feels good. But that still doesn't mean that it's an optimal situation, right? Because if you're not giving yourself the chance to let your winners grow up and really grow old, so to speak, you can't say with any after the fact or a posteriori knowledge that you know what you're talking about. Because to me, even that's how you get into this kind of what I call a productive rut, right? You're taking consistent small gains, but you're not really killing it. And so to me, trading shouldn't be, it's like the UFC. It's not a career, it's an opportunity. You should look at trading as something that could really change your life. And so don't get into these ruts where you're making money, cashing in every day, and not letting your winners run because you could be doing much better and you don't even have to you're not taking on any more risk. You're already in the winning trades. And that to me is how you really start to grow your account and go geometric or parabolic, right? You have geometric growth. and start earning many, many multiples on your account. Because then that's a process that you can replicate over and over and over. You see what I'm saying? Anyway, like this video, check out these.